Inflation and deflation aren't just buzzwords tossed around in economic forecasts. They're fundamental forces that shape the returns and risks of real estate investment. And if you're focused on commercial property in Portugal, understanding these dynamics is key to positioning your portfolio for what comes next. Portugal is entering 2025 with steady footing. Inflation is cooling, growth is resilient, and capital is moving. But if you're thinking long-term, the headline numbers don't tell the whole story. What matters is how these shifts ripple through asset values, rental income, financing costs, and risk appetite. At first glance, falling prices might sound like a win. Cheaper goods, lower costs, it's easy to see the surface appeal. But dig deeper, and deflation reveals itself as a sign of strain. When people and businesses expect prices to keep dropping, they stop spending and start waiting. That pause can stall the whole economy. In real estate, deflation hits harder than most realize. Revenues slip, tenants pull back. Projects stall. The value of debt climbs because the currency becomes more valuable. And when spending freezes, the foundations of property performance, occupancy, rent growth, development feasibility start to erode. Even central banks have fewer tools to counter this kind of slowdown, especially when interest rates are already low. On the other side, inflation is something most economies live with. A little inflation can grease the wheels, encouraging people to spend rather than save, nudging businesses to invest. But when prices accelerate unpredictably, the system gets distorted. Suddenly, planning becomes guesswork. Wages can't keep up. Households start cutting back. For investors, especially in real estate, it becomes harder to know what future cash flows are actually worth. Interest income or asset growth might look good on paper, but gets wiped out once you adjust for rising prices. There's also the issue of fairness. Inflation doesn't hit everyone equally. Those on fixed incomes or with savings parked in low-yield instruments often lose out. And for businesses, the challenge is even greater, managing cost volatility while trying to remain competitive. Real estate often gets called an inflation hedge, and that reputation isn't entirely misplaced. When inflation is moderate and predictable, rental income can rise with the cost of living, especially when leases include indexing. Property values can climb too, especially when new construction becomes more expensive and limited. But it's not always a straight line. If inflation drives up interest rates, borrowing gets tougher. That affects everything from development to acquisition. And if tenants start feeling the squeeze, even prime locations can suffer. The real advantage comes when real estate is financed well, with fixed rates and stable tenants. In that case, inflation can work in the investor's favor, gradually reducing the real weight of debt while preserving or even increasing rental streams. Portugal's macro environment right now offers a rare combination: stable prices and solid growth. Inflation has slowed to under 2%, aligning with European targets, while the economy continues to expand at a healthy pace. Domestic demand is strong, bolstered by rising employment and tourism, and private consumption shows no signs of fading. This stability matters. For commercial real estate investors, it creates a more predictable playing field. Asset values aren't being inflated by speculation or crushed by fear. Rents are responding to real demand, not just monetary noise. And with inflation largely under control, the risk of deflation, a far more dangerous scenario, remains off the table. The impact on commercial real estate has been noticeable. Investment volumes are surging, confidence is returning, and deal activity is rising across the country. Lisbon and Porto remain the central hubs, but secondary markets are attracting attention too. Retail, once under pressure, has shown resilience. Well-positioned high street properties are drawing consistent foot traffic. Hospitality is booming, particularly in areas with strong tourism. Logistics continues to benefit from new supply chains and demand for faster delivery. Even the office sector, often written off in post-pandemic narratives, is finding a new rhythm as companies seek flexible, sustainable spaces. What ties these sectors together is confidence in Portugal's stability, in its regulatory framework, and in the durability of demand. Momentum doesn't erase risk. Construction costs are rising, especially labor costs, which puts pressure on project budgets. Interest rates, though easing, still demand smart capital planning. Sustainability is also becoming a core issue. Even without strict environmental, social, and governance rules, investors are looking for energy-efficient, future-proof assets. Financing is tighter, too. Banks are more cautious, especially with new builds, making timing and clarity essential. Different sectors face different challenges, from shifting consumer habits to the rise of hybrid work. That's why careful selection and risk analysis matter more than ever. Portugal's commercial real estate market stands at a pivotal moment. It offers the kind of economic balance that's hard to find elsewhere in Europe: moderate inflation, solid growth, and an improving outlook on both the policy and investor sides. This isn't a market powered by hype. It's one supported by fundamentals. From retail corridors to logistics hubs, from hotels to offices, the opportunity is there. But it's not plug and play. Success depends on a grounded strategy, strong partnerships, and a clear read on where the risks are shifting. In 2025, Portugal isn't just a safe bet. It's a strategic one for those willing to look beyond the surface. And if you're ready to explore commercial real estate in Portugal, contact Roca Estate for expert support.